Hey traders, welcome back to another recap video. I actually thought there wouldn't be any opportunities in the market, but today I saw one, and it's been something I've waited for, I'll say since Monday. Since Monday, I've been looking to long Aussie dollar because of how oversold it is, and today is a 7.1k day. Let me show all of you my MT4, and I'll show all of you is a live account. So if you look at this, my MT4, see that? So it's real. I actually just deposited $30,000 into this account. If you've been using ICMarket, you know when there's a checkout. Not sure if you can always see, if there's a checkout SC, see the first one, that means it's a credit card deposit. So this can't be fake. Okay, so if it's a demo account, it won't appear the checkout SC. And just to show all of you, see that? So I'm not touching anything. Switch to the login tab. ICMarket Live 16. See that? ICMarket Live 16. Go back to the trade history. It's the same account. Okay. Yeah, 7.1k. So that's it from the credibility side. So now straight jump into the breakdown. So one of the main reasons why I've been looking to long Aussie dollar was also mainly because of how oversold it is. Oftentimes, when majority of traders, when they look at a waterfall chart like this, if I put on a replay, everyone would just look to sell. That's how the retail mindset work. I wouldn't say it's wrong to look for sell, because if you shorted here, for example, at 0.6543, you'll make money. If you shorted here on the break and retest at 0.6449, you will make money if you short it all the way. But there'll be one point where price started to bounce. And to me, I've been trying to capture the bounce. But rather unfortunate, it's Friday today. And it's right now in Korea time, is 2:53 a.m. So I'm feeling a little bit tired. So I just decided, hey, I'll just close full position on this one for about 7.1k, 4.6 R profits. So the main thesis came from Aussie dollar was approaching this multi-year low. And if you look at the daily chart, you can actually see this is 12 October 2022 low. Just say October 2022 low, and we technically broke out of that August 2023 low. So when I saw prices do multiple breakdown, to me, that's a big sign that we're about to see some big bounce. There's no guarantee that Aussie dollar will reverse all the way from here, but at least there's one thing it guarantees, which is Aussie dollar is definitely going to bounce. One big lesson that I teach my trade club traders, which is trading is all about thinking in terms of probability. That let's say when Aussie dollar, let me ask all of you here, logical sense, when price is approaching a multi-year support, do you think the chance of price bouncing off the multi-year support is higher, or breaking below the multi-year support is higher? The answer is, let me just write it down for all of you. Probability of price respecting a multi-year support, or probability of price breaking the multi-year. Which one do you think is higher? The answer will be number one. Because if you think about it from a logical standpoint, how much money does it actually take for price to literally just break out of a multi-year support? If you think in terms of the big player, that's the first thing. Second thing is, the market sentiment has to be extremely poor, extremely weak, for price to basically just flush all the way, breaking multi-year support, no pullback, and we just dump all the way. That's probably based on the macro factor. Maybe the currency itself is just bloody weak. That's the second reason. But otherwise, most of the time you're just going to see fake out around multi-year support or multi-year resistance, because FX is unlike crypto. It's unlike Bitcoin. We can just break out of it and it can go really parabolic for the next few months. But currency itself, it has to be balanced. Because if you think about it, it's impossible that Aussie dollar will just get weakened for the next 2 years. And that itself will cause Aussie to collapse. Aussie currency itself to collapse. So normally it wouldn't happen, because that's just how FX works. No matter how weak it is, normally when you switch out to the weekly time frame, you'll still see things on a range bound situation. Although Aussie is weak, I do admit AXY is weak, Aussie dollar is indeed very weak. But no matter what, you are still end up going to see some range bound price action on a weekly, on a monthly time frame. So that was my entire thesis on Aussie dollar. I then dropped down to just remember, I was expecting price to bounce off this multi-year support at this 0.6265 area, just roughly there. I don't know exactly which price level. That's not my job as a trader. I don't predict a specific level for price to reverse. I wait for evidence. And there's a big concept I teach inside our trade club called the right side of the V. I won't go through that, but drop down to the 15-minute time frame. So what happened was, I noticed a potential, I wouldn't call it a TPF formation because it doesn't tick off all the box, but I started seeing price having a potential to form first in an exhaustion formation. Exhaustion is something that we teach in our trade club as well. Identifying exhaustion, price bounce off that 0.6216. That's when I started basically looking for potential entry. So why was my entry so sharp? As in, you see, I caught the turning point literally, again based on my experience. So what happened was, I saw price bouncing off this TPF zone, and then we have exhaustions pattern, or we call it a rollover, a double rollover here, and I basically entered right there after seeing this mini 8-minute rejection candle. And after that, price basically just formed what? After I entered the trade, my stop loss was right at the previous low for about 10 pips. Price basically formed higher low, and break of structure. So what I did is, if you look at my trade history, right, I scaled in multiple times along the way. So my scale in were 0.6237, so, and 0.6244. So you can actually see the time here, not the time, sorry, the price level. So you can see here 0.6237, that's when I have a 5 lot scale in. 0.6244, that was when I was really confident scaling another batch. So first scale in was based on this high low formation. After I confirmed the high low here, that's when I scale in the first time. So I scale in roughly around 0.37, so somewhere here, after confirming the rejection. Second scale in after I saw price breaks out of the intraday high here. I then scale in on a BNR, also one of the strategy that we teach in our trade club. So that's basically it. This is a small position size, to be honest. I'm in about 18 lots. It's a very small size compared to my usual trading size. Normally on Aussie dollar, I'll trade anywhere between 30, I wouldn't say 30, 40 to 50 lots on my initial entry. But today I only entered like 10 lots on my initial entry, because I'm traveling and I'm trying to play safe. And yeah, that's it for the recap today. So 4.6R, 7.1K. This might be the final trade of the year as well, as today, as we are currently at 21st of December. I normally won't trade on on 25th because of Christmas all the way until early next year. So this might be our final recap unless I see opportunity on Monday, Tuesday, or Wednesday. Otherwise, yeah, this might be the final recap of the year. So that's it for the recap. I hope all of you learned something new. If you like the video, please don't forget to like, share, and subscribe, and I'll talk to you in the next video. Bye bye.